So good evening, guys. So uh, as far as the Nifty is trading, okay. So I'm going to talk about Elliott waves and how can we derive the further movement of price action of Nifty in hourly time frame. Okay. So there are going to be two views. Okay, initial view and an alternate view. So we are now going to talk about the initial view. Okay. Now if we consider the initial view, the bottom which was made after results or on the day of results is a sort of new impulse. Okay, so in that prospect, this is our okay. So if we consider this as impulse which began from 4th of June after the results. So this is our wave 1, wave 2, this is our wave 3. Okay, this is the complex wave, and this is the wave 5. Okay, so now if we look into this wave 5, do we have five major waves, sub waves? Do we have five sub waves? Then yes, we do have five sub waves. Okay, which are these? Okay, which I have just now marked. So these are the five sub waves of the fifth wave. Okay, this is the fourth. This is an initial view. Okay, so this counts are for with the initial view. This is wave 3. This is the fourth complex correction. This is 1 of 5, 2 of 5, 3 of 5, 4 of 5, and 5 of 5. Now, if we look at wave counts with the initial view, we can say that we have completed an impulse here. Okay, we have completed an impulse in this at this point on Friday, 19th July. Okay, we have completed an impulse. Now, again, if we see that are there, these five waves are even I think it's one. This is one. This is two. This is three. This is four, and this is the fifth wave. So there are five waves. Okay, five sub waves in the third wave here as well. But we look at these waves. Okay, I mean sub waves of 5 of 5. So if we look at that, here they are. Okay, if you look over here, this is 1 of 5 of 5, 2 of 5 of 5, 3 of 5 of 5, 4 of 5 of 5, and 5 of 5 of 5. So we have the subwaves of subwaves also present over here in the fifth wave. So now if we look at this picture through the perspective of initial view, I would assume that we have completed the fifth wave over here, and the current impulse or the current price structure after 19th July that we are into is an ABC pattern. Now, if I consider that ABC pattern, that is A, this is B, and then we'll have C somewhere here. So with initial view, I am considering that we have completed an impulse over here. On 19th July, we have completed the five waves, and then we are now heading towards ABC correction, okay, which is a zigzag correction, which might lead. We need to see further price action to understand if this is this is not a zigzag, but we need to understand whether it is an expanded flat or it is a regular flat. Okay, so in a regular flat there is a 335, on also in a expanded flat the structure is 335. So we need to see how the five waves are forming in this case. Okay, so in with initial view, I'm expecting that with the initial view, I'm considering that the fifth impulse has been completed. Okay, the major five waves have been completed, and we are now currently into an ABC pattern of which the C is ongoing. So C being ongoing, I can expect something between 23,837, 23,815. Okay, this is the minimum and the first target. Of course, price can sink beyond this, and if it has to sink beyond this, the last uh, I think the last point where correction can end is near about 23,450. Okay, 23,450. But I'm considering that the correction, if the correction is coming anyway, when we talk about the alternate view, we'll understand that why have we kept 23,800 zone as a support and also a way C wave where it should terminate. But we'll also talk when we talk about more about the alternate view, we'll see why 23,450 is also important. So as of now, looking with the initial view, okay, I'm considering that our correction will get our correction will end near our correction will end near 23,800 zone. So yes, so this is it. This is wave one, wave two, wave three, wave four, which is ongoing here, which was wave four, which was a complex correction, ongoing complex correction, and then we headed into a fifth wave. So even in that prospect, we have this is the fifth wave. Okay, red color is the fifth wave, and then we had one, two, three, four, and five. So we have sub waves of the fifth wave. Then we have the sub waves of five of five, and in that sub wave of five, we can see one, two, three, four, and five. So by looking at this prospect, we can understand. I can derive that. I can say that okay, we have completed the fifth wave over here, and what we are moving now is into a ABC correction, and I'm expecting a support near 23,800 zone. Okay, this is a view with alternate. Initial view is this. So if we go with an alternate, the only thing that is going to change is that this is the third, this is the fourth wave, and the fifth wave will be is going on. Okay, so if if the initial view is not holding, then what I'm expecting is that this is the fourth wave which got completed here, and then we are into a fifth wave. Now if this is a fifth wave, I'm repeating, if and only if this is a fifth wave, okay, if this is a fifth wave, then the sub waves will be this is one, this is two, this is three, this is ongoing fourth, and a fifth. Okay, and a fifth. But with that prospect, if I want to move ahead with that particular prospect, then price has to stop at between 50 to 61.8. Okay, so between 50 to 60.61.8 is fairly coming between yeah. So this is the zone where it should stop. Okay, looking at the global markets, looking at the US unemployment data and US market, of course we're going to open with the gap down. But even in that prospect, I am expecting that the market should at least stop. I'm so sorry. Market should at least stop between this zone. Okay, that is 644 and 542. This is a 100-point range. Of course, we are opening in a gap down tomorrow, but we also need to see if we are closing below this 61.8 on a daily close. If you are closing below 61.8 with a fairly good candle, okay, last hour candle or a daily candle, if we are making any sort of bearish candle, then we will not consider this as an impulse. Okay, for this to be an impulse, we are not allowed to go below 61.8. Okay, generally the wave 4 will stop near 50% of third wave. So if this is the third wave, okay, from here, beginning from the second, third is still here. Okay, third is up till here. This is the third wave. And if at all we are into a correction of 5 or 4, and 5 or 4, sorry, 4 or 5 is only allowed to stop between 50 to 61.8. So this should be the ideal zone where wave 4 should stop. Wave 4 of 5 should stop between 50 to 61.8, which is between 24,644 to 24,544. This is a 100-point range where it should stop. Of course, we are opening the gap down looking at the global market condition. But even if you're opening with a gap down, this zone particularly should provide a good support. And then market should bounce from here and then should go up in a 5 wave. Market should go in a 5 wave incline to complete the 5 of 5. So this is with the this is my view with an alternate wave counts. Okay, in the initial wave count, we had our third right over here. This was our fourth, and this was our fifth. Where now I have placed this third. Where now I have placed this third wave was our fifth. With my initial view, this third wave was fifth wave. This was A, B, and C. So these are the two different views that I'm considering right now. But looking at the global pressure and the US data, we need to hold 24,540 range. Okay, we need to hold this either 24, either way 24,500 is a psychological level where market should take a good support. So even if we come near 24,400, it will be an ending diagonal because wave 4 will be overlapping wave 1. So even that is allowed. Overlapping is allowed in the fifth wave. Okay, 5 of 5 overlapping is allowed. So even in that case, we are making an ending diagonal, which is a sign that the trend is about to exhaust. So that is the initial view. Okay, now the initial view. I'm going to stick to my initial view, but I'm also very much positive that if the levels are broken, if this level is not hold, 540 level is not hold, and we have a good bearish candle by Monday, Tuesday, then we are surely heading towards the C wave, which should be steep and uh, which should has momentum on the fall. So I'm sticking to my initial wave count. Okay, my initial view is somewhat like this. Okay, I'm not considering in my initial view. I'm not considering this is a 5 wave impulse. But if market takes a pause at 24,542 and start reversing tomorrow or by Tuesday, then we'll consider this as an impulse, and then we switch to an alternate view. Okay. So as of now, I'm sticking to the initial view where it will be A, this is B, and this will be C. Okay. So in the case of C, how much can we go down? Okay. So these are two targets where C should end. Okay, but we also need to understand how this 5 subwaves of C are playing out. We need to see how these 5 subwaves are playing out. If these 5 subwaves are playing out in a fashion that the fifth wave 5 of C is about to terminate 123.6, then 23,837 is going to be that zone. We will expect 5 of C to end. But while we are approaching 23,837 and we don't find the 5 wave into the C, then we will come down towards 23,453. Okay, this is one thing, and another level that I'm considering would be same 800 zone. So 800 zone in itself is going to provide a support. So we need to understand, well, while Nifty is trading between 23,800, we need to understand what are the sub waves of wave C doing. Either they are completing the fifth or they are completing the third, which will derive us to gather more information whether the correction is ending, the C wave is ending, 5 of C is ending at 23,800, or is going towards 23,453. So these are the two views that I'm going with. Initial view where I'm expecting that ABC is going to come in play, and with an alternate view, expecting that market should this particular impulse. If we go switch to an alternate view, then market shall not come below, only and only if we are expecting a this particular price action, this particular from 23rd July. If we are expecting this to be an impulse, if this is an impulse, then it needs to hold 24,542. It needs to hold this level anyhow. Okay, so I'm just marking. You need to hold above this level for this to be an impulse. For this to be a fifth wave, we need to hold here. That is 24,540 was the zone. Let me redraw it again. I don't want to mess with the levels of Fibonacci here. So yeah, 542, 543, or 540 is the zone where we should stop, and then we should start reversing. And reversal should be like it is going to be 1, 2, 3, 4, 5. Like if we start to reverse from here, it should be 1, 2, 3, 4, and 5. So in this manner, we are supposed to go up. So it is if Monday and Tuesday close is below 24,540 and with a good sign of bearish candle, then we'll be expecting that price will come to 23,800, and then we'll switch, and then we'll be holding our initial view that we are in the correction. With the alternate view, market needs to hold 24,540 anyhow. Breaking below 24,540 will lead into uh, C wave, which will bring us to the initial view. So there are two views, initial and alternate. With initial view, we are expecting that the fifth wave has completed here. We are into an ABC correction. With respect to ABC correction, we are expecting 23,837 to be a support for market to end the wave. And if while coming in the C wave down, if we are not completing the 5 wave impulse at 23,837, only then we are heading towards 23,450. But again, going with an alternate view, and if this is an impulse, okay, if this particular set from 23rd of July is an impulse, this was one, this was two, this is three, we are in fourth, and fourth is only allowed to drop till 24,453. And if we are dropping till 24,453 in the fourth wave, which will also bring us to an ending diagonal pattern. So there's the two views. I'm sticking to an initial view, but alternate view is also open. So it's better to wait and watch, okay, and to understand in which fashion the waves are coming down. Okay, this is a third wave. Okay, this is three of C. If this is the correction, this is three of C, and it should be steep. It should have gap downs. So yes, tomorrow definitely we are going to have a gap down, which will also which also supports our initial view that three of C will be sharp, will have momentum. So if the decline by Monday and Tuesday is sharp, and if the decline on Monday and Tuesday is steep with gaps, then we'll consider that this is a C wave which is going on, and we are still into the correction, and this is not the impulse. This is just the B wave. That's it, guys. Thank you. I hope you would able to gather some information from these two views, alternate and initial views. Thank you so much, guys.